Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing. And boy, I see a red on the board today in both grain and livestock futures trade, commodity-wide selling, DuWayne, and really a risk-off environment. Let's talk about kind of what came together to force that risk-off market flowing over from the outside negativity.
Yeah, it was really, you got to back up to yesterday in the Fed speech. They did not raise interest rates, but it was the comments afterwards that really shook the markets today. It sounds like we're going to be at this higher interest rate for a longer period of time than the market was anticipating. Well, higher interest rates for a longer period of time can put pressure on the general U.S. economy. And, commodities in general always take a hit when you think about the U.S. economy doing poorly. So a lot of red on every commodity we're watching today. It was kind of painful and a long day already.
Yeah, it gets the demand bears really fueled up, doesn't it?
It sure does, and probably rightfully so. I mean, I've been one that's been thinking our export demand is too high for corn and maybe even too high for soybeans. And we had our weekly export sales report this morning, Michelle, and it was not good.
No.
It wasn't good for corn. It wasn't good for beans. It was okay for pork, but couldn't tell that by watching the market either. That one took the hit probably the hardest today. So, no, just a lot of bearish news all the way around. Like I said, makes for a long day.
I want to dive into the export thing because soybean export so far, we've just started a new marketing year and we're already, 34% behind last year at this time, even though we have seen USDA revise numbers down in terms of export projections. I mean, do we have to be concerned about that?
Yeah, absolutely we do. And it goes back to Brazil's crop size from last year. And we see it in reports this week. China announced a large increase in imports of soybeans from Brazil during the month of August, like a 40% year over year. Usually Brazil's run out of soybeans, but they haven't, Michelle. And here's the thing is it looks like they're going to keep exporting right into our window, which is, normally October, November, December is when we export all of our crop. Brazil's going to still be out there and be competitive because our freight rates are super high because of the low Mississippi River levels. So it's kind of one bearish story after another. So absolutely, we should be concerned.
Yeah, and then we're at that time period where we're going to start seeing some seasonal pressure, hedge and harvest pressure too, on top of all of it, right?
Absolutely. We've been kind of anticipating a large farmer selling of the soybean crop this year. One, because it's still a decent price, right? These are good prices, profitable, where corn isn't so much. And secondly, you can sell just a little bit of soybeans at $12 compared to quite a bit of corn at $4 to meet your cash needs. So I look for a lot of farmer selling, and I think you've seen that this week. That's why the market's tumbled down so hard, but we're getting closer to support. So that's some good news too.
Let's talk about that. We took out 1304.05, whatever that level was. That was the 100-day moving average in November soybeans. We took out 13 today and closed below it. Where do we find the next support?
The support I'm watching is the August 8th. We went down to, what was it, 1282, I believe it was on my chart there. So, we're about, 7-8 cents away from that now. The way the market closed right near the lows, it looks like you'll open lower tonight, but I also feel like we overdid things here. We're also very, very oversold. So I think that 1282 should hold tomorrow, maybe have a little bit of a bounce back. And believe it or not, even at that level, as bearish as I talk about demand and everything, I'm willing to exit a few hedges there and take the risk back on because it's not a story yet, Michelle, but Brazil is hot and dry. And if that continues for another week or two, that might start to be a story, at least where we need to build a little weather premium in.
Speaking of Brazil, we did get new figures out for next year's corn crop for Brazil. Yeah. And actually, they're looking at maybe a smaller crop next year, aren't they?
They are. That kind of surprised the corn market yesterday and was the result of a higher corn trade yesterday. Yeah, CONAB came out with their lower numbers. What they were like 119 million metric ton, where USDA right now is at 129. So that gave the market a nice pop yesterday, but it's funny. That's old news today now, isn't it?
Didn't last long, did it?
No.
We're still within our trading range, though, if we're talking about technicals on corn. We're in a pretty tight range here right now, but we're still within that range, right?
As much as a bear as I am the corn market, it isn't exactly crashing. So I do understand the bulls saying, well, look at it. All this bearish news is out there and we're not making new lows. We did make new lows just a couple of days ago, but we're not crashing through it. I'm impressed with that, but Also, maybe just a little bit disappointed. Now, let me explain why. I mean, usually we always want high prices, but in this case, I think it would be better for the corn market to just go down, find some export demand, maybe steal some of that market from Brazil and have China buy some of our corn. That way we can have a better bullish market in 2024. If we stay around this, 480 and rally back to 510, I'm worried our export demand is just going to be cut every month by USDA and we end up with more corn in the end.
Yeah. And I know China's been in quietly buying a little bit of corn under the radar, but man, they are well under where they were last year at this time for what they bought.
Yeah,
Wheat market. Let's talk about that. Higher dollar today, but also maybe some, was it technical selling pressure again? And unfortunately, I think we made new contract lows in Kansas City wheat today.
Yeah, we did. Yeah, Kansas City wheat made a new contract low. The old low was 709. We were one tick below that today and closed right
Ouch.
near it too. So that's not good. You got rain in the Midwest, so I think that should encourage some winter wheat planting. At least it'll make it so anyone who was going to plant winter wheat isn't worried about a drought scenario. That mixed with, like you said, the higher dollar is a really big deal too. We just talked about export demand a lot, and of course, the higher dollar is always negative for that. And wheat, we can't get a story out of Russia, Ukraine anymore. I believe last night was some of the worst bombing of the whole war last night, and the market just didn't care anymore about that story.
Yeah, we just get numb to it after a while. Cattle market, well, back down again here today. Again, caught up in the risk off. But did you think we were kind of due for a bit of a healthy correction? And is this like the other corrections that we've had where it just kind of funds by on the break or not?
I think so. Right now. I think it's important to point out that there's a cattle on feed report tomorrow, and it seems like for whatever reason, those Thursdays before those cattle on feed reports, you always see some red on the screen. And with the macro situation, what we already discussed, the cattle wasn't going to be able to hide from that. Actually, they should take it the worst when you think of how high priced cattle are. But I'm not worried about this market quite yet anyway. We've both heard a little bit of cash cattle news around steady money, that 185 on a live basis up north. That's still a good ticket. Yes, we're at the deferred contract months are at a premium to that. But gosh, Michelle, the numbers just don't seem to be there. And me being as bearish as I am the corn market, I think guys are going to buy up the feeder cattle very aggressively this fall and want to feed them and maybe walk the corn off the farm this winter.
Yeah, and it's funny, as you mentioned, we usually sell off going into the cattle on feed report, which is actually expected to be fairly bullish again tomorrow, isn't it?
Yeah, and that makes total sense, right? That's just what we do market-wise.
Yep.
A lot of things never make sense. Otherwise, it'd be easy.
You mentioned, let's talk about hogs. You mentioned pork exports, actually much better than what we saw last week. Market really disregarded it, but we did go up into the upper end of the trading range yesterday. So was this just some profit taking?
I think so. Yesterday we were up sharply and everyone was like, well, that was a nice day. No one wanted to complain, but I think it went a little too high yesterday. So that's why the overcorrection back today lower for the hog market. In general, I think hogs have a really good story here moving forward as far as just a low base. It's at a big discount to the cattle market. It's the cheaper meat. And if we're going to have high price fuel and higher interest rates, people will look for that cheaper source of protein moving forward.
Okay, thanks for joining us. That is DuWayne Bosse with Boat Marketing and Markets Now.